Hi, I'm Mike Lawson. Welcome to this version of CU Broadcast Short Takes. Check out these highlights from today's interview with Credit Union Times Editor-in-Chief Sara Cooke. For the complete story, click on the link below.
Now the Consumer Financial Protection Agency, or Bureau, excuse me, is going to be coming out with its regulations on top of regular NCUA regulations, on top of, all the Dodd-Frank stuff that's coming into play. It's going to wreak some more havoc than usual on credit unions.
Like we haven't had enough havoc already? Come on.
Well, I think one of the top things is going to be credit unions' upcoming assessments and premiums, as I mentioned earlier. Yeah. 20 to 35 basis points is the estimate out of the NCUA. I think that the Consumer Financial Protection Bureau is going to be putting out some interesting regulations, and even though 99% of credit unions aren't directly covered by them, the NCUA will be in charge of enforcing those regulations on consumer protection. So that'll be very interesting, what Elizabeth Warren or whoever else comes out as the head of that organization. It's going to have a big impact on credit unions and financial institutions in general. From talking to everybody, I'm no financial guru, but I've learned a few things in the last 10, 11 years. But I think the NCUA has done about as well as it could in fixing the corporate problem and creating the legacy asset plan. Hopefully next time a crisis like this is headed off prior. Oh, yeah. And so that's one thing. I'm not sure there's no solution at this point until we hit the next crisis. Yeah. I guess credit unions are going to have to look to different sources of income, such as possibly student lending, mortgage lending, if the rates go back up, which I think they're expected to do. And then also business lending has been a hot topic, lobbying for things like that to expand business lending using the Small Business Administration. There's lots of non-interest income opportunities in that. So as credit unions are losing their ability to make as much money on debit card interchange, they can still make it up possibly somewhere else, like I said, such as business lending or forming a QSO and making money off of that. One of the pieces of this crisis, for credit unions in particular, was the corporate boards were not on top of what was going on within the investment portfolio. And the same thing could very well go on in credit unions. I mean, there were the Centrix issues, the lack of due diligence. So keeping people informed, I think, is the #1 issue. And then what people do with that information, hopefully, is going to be for the better of the industry.